Indians like their alcohol. I think the world does, but the consumption in India is only growing with each passing year. What's not so encouraging though for liquor makers is the constant change in the tax structures. There has been recent hike in ethanol prices might actually have a beneficial impact on margins because they manufacture ethanol and might be beneficial for them. More and more molasses gets diverted to ethanol production, maybe just helps the liquor companies as well, at least the ones which have some capacity. So all in all, it's a heady mix for liquor makers like Globus Spirits, whose joint managing director Shekhar Swarup joins us right now on the show to talk about the recent price cut by United Spirits, the ethanol pricing and more. Thanks so much for joining in, Shekhar. Your peer United Spirits recently cut prices to bolster its market share in the country. Does this force other companies as well to cut prices in order to either maintain or gain market share, not just in Maharashtra but across the country? Your views here?
It's very difficult for me to comment about the strategy of United Spirits to get market share. But for our brands, we operate in the IMIL space as well as the IMFL space in the premium segments. And we have a certain strategy on how to get market share for our IMFL brands, which is to provide consumers a better product than they have been previously getting at those price points. And that is working well for us so far. Whereas it is early days, our brands have only recently gone into the market. We are getting distribution at the level that we expect in Karnataka, Telangana and Andhra Pradesh, as well as Pondicherry. In the case of IMIL, no, we have not needed to make any price changes. In fact, we've had price increases in Rajasthan, which were given to us by the state. Again, as you're probably aware, for IMIL, it is pretty much a single price point market across the country. In every state, the price point differs, but it is a single price point in that state. And the state decides whether to give you a price increase or not from time to time.
Okay. So, Shekhar, the simple question would be, how does this price cut affect margins or pricing for companies like you?
So, honestly, I'm not. So in every state, the strategy differs, right? So United Spirits or any other company taking a price cut in one state does not reflect on the business in other states. And the fact that they're taking a price cut in a state could be because of changes in their portfolio that they want to bring. I don't see it as reflective of demand in any state, because the states that we operate in, at least, demand is quite strong at the price points that we are occupying. And there are certain brands of United Spirits that are also, and other players that are occupying those price points. This is, probably a one-off for one or two states. It's not something which is reflective of the market. Demand is quite healthy. There are new consumers that are coming into higher price points. There is upgrading of price points that is taking place, or premiumization as we call it. I think the market is quite healthy.
So, okay, so let's talk about the market being healthy. We are halfway through this financial year. How have the first 6 months been for you?
Sure. So Q1, based on our results, has been pretty good. We had price increases in Rajasthan, and that continues. Thereafter, there has been sort of cross pressures that come into Q2, especially on the agri commodities side. The rupee not doing so well has also impacted some of our raw material purchases. So there's been some cost pressures, but by and large, business is firm, and our business is quite sort of sticky, both the IMIL business as well as the bulk business. So that's been going pretty okay.
Okay, so does this whole scenario, therefore, Shekhar, challenge the super expansion of margin phase that a lot of investors believed companies, not just you, but other companies in this space could have going ahead as well?
I don't think so. The alcohol business, like you said earlier, is expected to be grow quite phenomenally, both in volume as well as value over the next decade or so. And that's sort of the reason as well that there have been a lot of M&A activities in our industry, especially international companies coming in. I believe that the market will certainly grow in double digits CAGR over the next few years. I also believe that the value will grow as well. Some companies taking price cuts now and then is not, I don't believe it's reflective of the overall trend that the alcohol industry is going to have in the next decade.
The second thing that I wanted to talk to you about is ethanol pricing. How do you view this ethanol pricing verdict, and would you be a key beneficiary of the new prices and the tenders that will be put out from October or December?
So this has a pretty substantial impact on the entire alcohol industry. The largest purchaser of alcohol, and all alcohol comes from distilleries, is the other OMCs, and they have this year, in the year starting 1st of December, which is the sugar year, they are going to be purchasing ethanol at about 20% premium compared to the previous year, especially for grain alcohol, and about 10 to 12% premium for molasses, C-heavy molasses, the traditional molasses alcohol. This will push up the price of any alcohol that anybody wants to purchase in the country, I believe, by similar amounts. For grain alcohol, about 20%, and for traditional molasses alcohol by about 10 to 12%. And as a result, the companies which are surplus in bulk alcohol, such as Globus Spirits, will probably benefit from this quite significantly. And companies that are deficit on alcohol, companies that rely on buyers for alcohol, will probably in the short term stand to sort of lose a little bit of their value to this commodity. Now, the long-term impact of this has to be seen. Of course, this is being driven by the OMCs, driven by the Ministry of Petroleum. As long as it continues to make sense for India to purchase ethanol and dope that with petrol, I believe this policy will remain the way it is today.
Is this a material impact on your EBITDA, Shekhar?
It will have a pretty significant impact on our company. Our volumes will go up to the extent that our Bihar capacity, which was currently underutilized, will become fully utilized. On the other hand, our EBITDA side, our profitability will improve significantly for the alcohol that we've been selling as bulk into the market. So about 50% of our overall capacities we sell as bulk to beverage players in India and overseas. So the value of that 50% will now stand to increase quite a bit.
Okay, but if the tenders are due from October or December to November next year, does the impact, the material impact that you spoke about, come in the current financial year, or is it only in the next financial year, that is FY19?
So the tender period is 1st December 18 to 30th November 19. It's difficult for me to say at this juncture what period Globus Spirits will be bidding for. Globus Spirits will start bidding. The process of bidding is open currently, and based on allocations, we will then figure out when our dispatches will start, which quarter onwards our dispatches will start. But it's safe to say that FY 19-20 will see the entire impact of this policy. And I'm unclear currently as to whether the current financial year will have some impact of this policy.